Good afternoon. Good afternoon, traders. Welcome to Paul's Monday Market Update, number 217 for Monday, 9th of March 2026. Great to be here. Hopefully, we will not have the tech problems that we had last week. Apologies again for that. I think that was just every man and his dog was on the internet that day, and for obvious reasons, which continue and give us a lot of the detail for today's session. Whether you're joining us live or whether you're watching the live stream, I hope that you can see the slides. Hope you can hear my voice. I hope that you are well and safe wherever you are joining and watching us from. The Monday market update is just that. It is me flying through as much as I can cover in the next 25, 30 minutes, looking at strength and weakness within FX markets, looking at some charts of interest to add to your watch list, and then a look at the live markets. It is not a signal service. There are no trade recommendations. It is just me sharing what I'm looking at, which may be of relevance or help and support to yourself. As always, you are very welcome here, but just remember you are always responsible for your own trading decisions. Also, if you want a little bit more help and support in your trading, regardless of how you trade or what you trade, the VTP Trader Accountability Group is up and running, helping people build discipline, accountability, and consistency in their trading. Okay. If you want more details, you can ping me, or once again, that QR code will take you to a page with more detail. So here we are on some of my charts, okay, some of the watch list. What is this we're looking at? My charts are always pretty simple. Weekly chart, blue 20 period, red 50, green 200, and some fractals on there. What is this? This is the basically commodity CRB index, all right? This is the CRB index. It's like a broad barometer of kind of global commodity inflation, kind of covers energy, metals, agriculture, and not unsurprisingly, commodity prices are still heavily influenced by geopolitics, supply disruptions, and global growth expectations. Okay, so what can traders take away from this? What does it mean? Well, a rising CRB usually means there's inflation pressure. It usually helps the commodity currencies, so like Aussie and Canadian dollar, and it also has a kind of an element on kind of being weaker for bonds. As I said, this is a weekly chart of this index, and let's get the old drawing tool up here. As you can probably see, really for the vast majority of the kind of the last few years, we were for the most part, kind of, just going sideways in a range between about 260 and 300. Now, some might say, well, actually, Paul, once we're up at 300, we were pivoting around and we've had an explosion out of there. Okay. And that's most definitely where we've gone there. And you can see that. Okay. And as I said, it is, it's a useful indicator just to give us that kind of, give us an indication of inflation pressure, stronger commodities and commodity currencies, and it is just reflecting the kind of world we live in now and how this has just kind of exploded in the last couple of weeks. So it is something that's always useful to sort of keep an eye on in terms of your overall global macro picture to get an understanding, okay, of what the story is.